In today's video, we're going to discuss 3 reasons why I'm buying Amazon through AMZY. We all know AMZY is going to have a huge dividend and it's launching soon, but there are 2 other reasons why I'm buying AMZY that you should stick around for until the end of the video. We make over $100,000 in dividends per year at this channel, and my performance and value is beating the market. It's showing I'm beating the S&P. The S&P is up 9. We're up 16%. The Dow is down for the year, and NASDAQ is up 24%. Okay, so we're beating the market again, 16%, but the NASDAQ is beating us by more, and we've been trying to catch up in performance to the NASDAQ. So we've been buying NVIDIA on the NVIDIA news recently. We've been buying Apple. We've made a lot of videos on this, but the reason why my performance is still not beating the NASDAQ, but beating the S&P is because IEP has taken a dive. But luckily, we only have such a small amount in IEP here that it's negligible in our performance. Plus, the 40% that we're down here, it hurts, but not really. It's just an ego blow. You don't worry about market value and profits on paper when you have dividends. The dividends will cash flow the investment in 5 years. 20% dividend times 5 years, 100% return there. That's if he keeps the dividend. This is a big if. That's why I keep IEP small. Position size management is key whenever you're investing, but especially when you're dealing with margin. As you know, we use a little bit of margin here. For every $1 you put in your account, you get $4 of purchasing power, 544. And so I use a little bit of that margin. You can see here down here, 250,000. My principles work with or without margin. You don't need margin to have dividend paying funds that help you get ahead in life and make you financially free. Also, dividends qualify to banks for loans, so you don't have to have a job when you have dividend paying securities. They, again, act as a paycheck. You can't do this with trading stocks. They do not act as a pay stub. Banks will not take stock money because it's too up and down. You have to have dividends. And so I use a little bit of this extra margin purchasing power to get more dividends, which the dividends that I earn, 100,000 per year, as you saw before, they're going to pay back my margin debt in less than 3 years. So I'll be left with all of the dividend paying assets free and clear all to myself. So if you need help with margin, please email me at akintodd48@gmail.com. I have e-guides for margin. I also have e-guides for Cornerstone. Forgive me for all my current subscribers who know about Cornerstone, but here it is. See these $6 lots here, $6 down here. Look at the profit, 16%, $6 over here, 19%. They reinvest your dividends at the NAV every month in Cornerstone at a 21% dividend. Cornerstone pays a 21% dividend. Reinvest your dividends at the NAV, so it reinvests at 21% gain, 21% yield, and you get those gains that you just saw, those 19% gains, because the current market price is here at $7 and they're dripping you down at $6. So that's the benefit of Cornerstone and why it's a 4-star fund. And if you need help with Cornerstone and how to play Cornerstone, please email me. I have e-guides on Cornerstone as well. You have to buy Cornerstone and sell before the rights offering to really take advantage of this, and you have to drip your shares. So I give you help on that if you need that. Anyway, so we're buying Amazon through AMZY. Why? The first big reason is the dividend. Of course, the dividend is the main reason why we want this, but look at the implied volatility. Amazon's implied volatility is 31%. So it's not just a 10% dividend. You could be getting a 30% dividend here because options go off the IV. So we could be looking at a 30% dividend in AMZY, and you all knew that. My current subscribers know that the dividend is going to be large. So what are the other 2 reasons why I'm buying AMZY? Well, if you're familiar with this channel, you know I like index exposure, okay? We use all this margin, but we tie it to the indexes, okay? So that's how you get not only extra performance like you've seen in my account, but that's how you avoid margin calls. Again, you don't need margin to do any of this, okay? If you're going to buy Amazon without margin, you still want to look at the sector allocations, okay? I just want the best performance possible. So you don't want to get too overweight in the sector allocations. If you go to QQQ, you'll see here that Amazon is 6% of the Qs. See Amazon here? 6%. See, 6.19% is Amazon. And you remember our NVIDIA videos and Apple videos. Apple is almost 10% of the NASDAQ, okay? So if Apple's almost 10%, as you see down here, Apple 12%, okay? Amazon 6%, And of the S&P, they're also large weightings. The Amazon is one of the top holdings of the S&P. So if you want index exposure, you want to go with how much they have in the indexes. How much does Amazon have in the indexes? In the NASDAQ, it's 6%. In the S&P, it's about 2%. So I want to get in between 2 and 6% because I like to have my performance pegged between the S&P and the NASDAQ. If I can beat the NASDAQ, that's great. But that's usually not going to happen. And you don't want to have everything tied to the NASDAQ because when the market falls, you're going to get hurt as much as the NASDAQ gets hurt. Or if rates rise, you're going to get hurt again if you're in all tech-based companies. So you don't want to have too much exposure to the NASDAQ. I just want to beat it because I'm competitive. And also the NASDAQ is cheap. Tech stocks are cheap. I don't want them to just take off without me and I'm just collecting dividends. I want the best of both worlds. I want 100,000 per year in dividends and I want capital gains. I want the performance. I want it because it's a free country and who doesn't want the most out of their account? But also I want to have cushion for margin calls. I want to build up this number here, this available withdrawal, 106,000. So that I can have more distance between me and a margin call. If the market falls, I'll be up so much that I'll have so much equity, I don't care about a margin call. This number, 361,000, that is a meaningless number to me because you could theoretically have that number go to zero. And as long as you have these shares here, you're holding the shares and they're paying the dividends each month, then that's all you care about. The dividends keep coming no matter how much you're down on your cost position. IEP is a case in point of that. So yeah, all these dividends just keep coming. Even if you are down in your position, these 3,500, 200, 200, they all add up and they keep coming every month. So don't care about the market value. I only care about this available withdrawal number. Now, the second reason I just gave you for buying Amazon through AMZY was the sector allocation, okay? Now, the third reason we're buying Amazon through AMZY is because, and I'm going to show you a chart here. We go down to Amazon. I bought Amazon to make way for AMZY because you want to own both AMZY and Amazon. I'll get to that in a second. Excuse me. So look at Amazon on a chart. It's cheap. That's the third reason why I'm buying this. It's a part of the indexes. Yes, but it's also, it's one of the largest part of the indexes. So if you want exposure to the NASDAQ or the S&P and you want growth, Amazon is one of the best candidates out there for that. For the reasons I just listed. We could go through the fundamentals of Amazon, how they're taking over the world, and a lot of other videos I'm sure on a lot of other channels on YouTube will go through all the little specifics of Amazon, but that doesn't really make you money, okay? We already know that it's a quality company. We know it's in the indexes. We know it's a large part of the indexes, so we're not worried about the fundamentals. Anything in the S&P or NASDAQ that's down, you don't really worry so much about the fundamentals when they're top weightings. You just simply wait for them to dip and you buy them. You don't have any emotion about it. So look at Amazon. It's cheap. It's around 100. It's around 100 a share price, and it's around its 100-day moving average, that blue line, on a max chart. It's oversold on its RSI. As you can see, the MACD is about to cross. If you need help on e-guides on how to read charts and basics of charts and how to select a stock, I also have e-guides on those. Volume 1 and 2 of my e-guides that I amassed over the 20 years of experience I have in the market. I wrote them into volume 1 and 2. So if you ever need that, no one ever asked me for volume 1 and 2. They always ask me for 3 and 4, and so I just give them all 4 in that package deal, like I've always told you, all 4 for $100 and my phone number. If you buy all 4, you get my phone number. So you can also get volume 1 and 2 though in that package, and it shows you how I enter and exit my positions using these charts and using macro information like interest rates, inflation, etc. So, okay, Amazon, it's at 100 roughly, and it was at 200 roughly. So it has almost a double in here. So it's at 120, it was at 200 roughly. You could see, from 120 to 200, you do the math on that, okay? But let's just get a nice chunk of gains in between there, about 10 to 20%, 30% of gains. It's highly likely, and before even Amazon reaches its old highs, okay? 120 to 190 was that old high, so it looks cheap. And let me just do the math really fast for you. 120 to 190 is 58%. So I'm just looking for 20 to 30%, a good solid 20 to 30% in our investment. So it's cheap. All right. Now, how do we play Amazon though if it's cheap? You can't just say I'm buying Amazon through AMZY because A, monster dividend. B, it fits my sector allocations and my weightings to match the indexes. And C, because it's cheap on the chart. Now you have to have a strategy for it, okay? And the best way to play these covered call funds, I think, is to buy the stock, okay? You buy Amazon itself, okay? I bought $720 of Amazon. I'm not trying to make a killing on the Amazon stock. I'm trying to just hold the fund, AMZY. I'm going to put about 5K in AMZY. But that has covered calls, AMZY, so it captures upside. You have to still invest for growth. Now, I usually also put in shorts. So like yesterday, we did that video on NVIDIA, and also we did a video on Tesla, and we talked about having a Tesla short. So we have Tesla, we have Ford, and we have TSLS. To hedge TSLS, I bought Ford. To hedge Tesla, in case Tesla runs up and we just collect the dividends and upside gets capped, I bought Tesla. So, and over the long term, those could turn into cheap lottery tickets. So I'm doing the same for Amazon. I'm buying Amazon. I might buy the short. It might be AMZD. I'll look into that. When the time comes when we buy AMZY, I'll look into the short. But if I only have 5K of Amazon, I'm probably not going to do a short. The only reason why I have shorts of OARC up here because I have SARC for OARC. The only reason why I have shorts of OARC is because I have 22K in OARC. The only reason why I had a short in Tesla was because I have 8K in Tesla, and that's a little overweight for me. But Apple 5K, NVIDIA 5K, I'm not even going to short those anymore. So I'm just waiting for the next little dip, the next little dip in NVIDIA to sell my short and break even, because NVIDIA's had a huge run, okay? So I'm going to sell that, close that short for hopefully some sort of a break even. But even if we lose on that and the stock moves higher, well, I have NVIDIA. I have 389. So we lost $13 on the short in NVIDIA and NVDS, but we made $9 in NVIDIA. So the short's not hurting us anymore. That's nice to know. And we're just going to make our money on the covered call side, NVIDIA. But again, NVIDIA could have a large run. We want to make sure that we have exposure to semiconductors as they go higher. So I also sold a put and Soxel, which I got rid of on Friday. I took that profit because I bought NVIDIA. And so I'm going to add more to NVIDIA on any dips, but I need my shorts to come back some. If we just go higher and the shorts keep going lower, well, that's a good problem to have. NVIDIA will move higher for me. It'll offset the short. And then our dividend is protected on TSLS. I mean, on NVDY, okay? Our dividend will be protected. So that's really what we're doing in this channel. We're just collecting dividends, but we don't want FOMO. We don't want to miss out on really hot trends and themes. So I bought some stock, even though it's not paying me any dividends, NVIDIA, and I bought some Amazon because it's not paying me any dividends, but it's going to offset that decay and the capped upside from AMZY. So and I'm not risking much to do it. I'm just risking $700. So it's not like, even if I went to zero, I'd lose 700. It won't go to zero. Even if I lost 50%, I'd only be down 350. So I'll look into the short if I get overweight in Amazon. But I'm not planning on getting overweight in AMZY or Amazon. I'm just going to put about 5K. And then as those positions build out, then I'll look into the short. And then I'm going to want to have those little longs on like Amazon or NVIDIA to offset the shorts. Because you don't want to just lose for no reason in the shorts. If I have 1,000 in short and I lose in that for the year, that cuts into a third of my dividend profits from the covered call fund that I'm buying in the first place. So anyway, that's why we're doing Amazon through AMZY. Large dividend, maybe 30%. You saw from the implied volatility there. We're doing it for sector allocations because you need to match the indexes if you want performance, and you don't want to go overweight. You got to follow the rules, match the indexes. And then we're doing it because it's cheap. But then beyond those three reasons, you have to have a strategy. And the best way to play these cover call funds is to have a little bit of longs in there with it. Amazon long, and then if you get too overweight in the position, look into an Amazon short to pair with that long. And so anyway, the dividends, 5K in Amazon, we're going to put in AMZY. So that's going to be about another, hopefully, $1,500. And when AMZY dividends come through, well, when they register, the AMZY, the NVIDIA, and the Apple dividends, this number is going to go up to about 119 per year. So 119 per year in dividends we'll be receiving. That's about 10K a month. Plus our goal is to get up to 140 for the year through the drip and Cornerstone. Because if you reinvest those dividends every month, then do the math at 20%, 7K dividends each month for 12 months. Do the math on that. Comes out to about between $10,000 and $20,000. So that's how we're going to get our income up from 120 to 140 without doing a thing. So yes, my margin might not get paid down while I'm reinvesting those dividends with Cornerstone, but my equity is growing. And all I care about is this number growing here, this 106 available for withdrawal. That will grow as my dividends come in. So yes, you don't want your margin debt to creep up, but this has been a historical year. For the last 2 years have been historically low for the market. So I'm using margin at these lows. When the market is back up to its highs and has its move, then I'll get out of some of these names that don't even pay a dividend, like TQQ. We added to TQQ recently, 5K in this. We're up 8%. I wish it was more. We'll sell all of our lower paying dividend names and non-paying dividend names to get this number down to about 200 grand by the end of the year. So I'm not worried about paying my margin debt right now. I'll just simply sell everything when I need to sell everything. Okay, so you can use your dividends to pay your margin debt down, or you can let your margin debt grow, and you can still travel the world and do whatever you want out of this number. So even though I'm in 250,000 in debt, it's only 5% interest charged. So I don't mind traveling the world, do whatever I want. I'm going on a trip this week to New York. Stay tuned for that video because I'm going to be covering the skyscrapers in New York and showing how they're not going out of business. Our play with SLG here, down here, SLG. So I get to go to New York and travel all through my debt. I don't have to pay this debt down. Okay, I live out of debt. That's what all the big guys do. Tesla, Elon Musk, how did he buy Twitter? Through margin debt. How do all these guys buy their super yachts and everything? Through either selling shares of their company or through margin. So that's the way to live, through debt. Don't live through credit cards that charge you 20% interest or something like that. I live off margin interest and margin debt, and just keep this number high enough to where when you travel, that doesn't get eroded down. So if I spend a couple thousand on my trip coming up this week, this will fall by a couple thousand. But then as my dividends come in, my equity will grow again. So I'm really not ever worried about it. And again, one day when the market has a bigger run up back to the highs, I'll dump a lot of these funds that are low paying dividends or no paying dividends. And then this margin will go down on its own to about 200K. And then the 100K we earn in dividends will pay the margin down in less than 2 years after that. So you don't have to there's not one way you have to work this margin strategy. You don't have to use margin at all. You don't even have to use margin. Just live off the dividends and apply the strategies that I told you. But if you're interested in margin, that's how I use it. I don't have to pay it down linear or right away because the interest is so small. I have many different ways I can work with margin. I can sell options if I want. All the options that I want down here, I can sell them and lower my margin even more. All these sold puts down here, I've made about 30K from these puts, and that lowered my margin by about 30K. So you can bring in paychecks from the outside if you still have your job. There's so many things you can do that you don't have to just pay your margin down linearly in a linear fashion, but you can, and I have, and I usually do. But right now I'm taking advantage of these opportunities from these Yieldmax funds and from tech being cheap. So anyway, I hope you enjoyed the video. Again, if you need help with the e-guides, email me at akintodd48@gmail.com. I have margin e-guides, Cornerstone e-guides, volume 1 and 2 are technical analysis and fundamental analysis. So if you need that, please email me. And if you have any other questions, leave them in the comment section below, and I'll talk to you soon. Thank you.